Hi there, Shazrin here. Britain bans Binance, Ark Invests in Bitcoin ETF, Robinhood Robbing Who? These are the news of the week in ShazrinFinance. Hello everyone, this is ShazrinFinance News of the Week, where I read the news for you so you don't have to, because financial news are boring. So I'm gonna try my best to make it interesting. First news: Britain bans Binance's UK ops in latest cryptocurrency crackdown. Britain's financial regulator has said Binance is one of the world's largest cryptocurrency exchanges, cannot conduct any regulated activity, and issued a warning to consumers about the platform, which is coming under growing scrutiny globally. In a notice dated June 25th, the Financial Conduct Authority (FCA) said Binance Market Limited, Binance's only regulated UK entity, must not, without the prior written consent of the FCA, carry out any regulated activities with immediate effect. It also issued a warning to consumers about Binance Markets and the wider Binance Group. Binance said in a statement that Binance Markets, which it acquired in 2020, was not yet using its regulatory permissions, and that the FCA's move will not impact services offered on its Binance.com website. So basically what happens here is the UK authorities are banning Binance, but they're only banning Binance Markets Limited, which is like a subsidiary of Binance in the UK. So Binance itself says that their services are not impacted by it. This is a huge jab on Binance, just to make sure we're clear. So British citizens will still be able to access Binance's services in other jurisdictions. And then Japan's regulator said on June 25th that Binance was operating in the country illegally. A notice posted on Japan's financial services agency website showed. So this is a really bad image for Binance. Even Japan is doing crackdown on them, saying who knows what the future of Binance will be. Binance, the world's largest cryptocurrency exchange, gets banned by UK regulator. Cryptocurrency exchange Binance has been banned from operating in the UK by the country's market regulator in the latest sign of a growing crackdown on the crypto market around the world. So if you haven't watched the news from last week, I talked about a crackdown on Bitcoin mining in China, which is also a huge thing. Go check it out if you want. Britain's Financial Conduct Authority said Saturday that Binance Market Limited, the UK division of Binance, is not permitted to undertake any regulated activity in the UK. Binance, the world's largest crypto exchange by trading volumes, was set to launch its own digital asset marketplace in Britain. However, it was one of the several crypto firms that withdrew applications to register with the FCA due to not meeting anti-money laundering requirements. So that's the main reason why most regulators are banning crypto exchanges. Binance is one of them, because it's hard for them to track money laundering apparently in these exchanges. So they want to make sure these exchanges meet the anti-money laundering requirements before they are able to continue operating in the UK. The FCA spokesperson clarified that the scope of the ban was limited. Though Binance Markets Limited is banned from offering regulated services in Britain, non-registered firms can still interact with UK consumers. That means Binance could still offer Brits crypto trading through its website. So yeah, it's just like previous news, basically explains that Binance, although it is banned, people can still use it, just like some parts of the US. In the UK, it's probably going to be the same. The FCA isn't the only regulator clamping down on the crypto industry. Japan's financial services agency warned last week that Binance was operating in the country without its permission. Same as the previous news, as I said. Next news: Cathie Wood's Ark Invests to create a Bitcoin ETF under symbol ARKB. For those who don't know Cathie Wood, she is a very prominent fund manager nowadays. I really respect her. I think her funds are going to be the greatest funds in our decade probably. She invests in really advanced technologies that have a future that's so ahead of us that right now is still undervalued. That's how she sees it. So Bitcoin, in that regard, based on this, she thinks Bitcoin is really undervalued. Once said Bitcoin could reach up to $500,000 per coin. So this is one of the things, I guess. Cathie Wood's Ark Invest is creating a Bitcoin exchange traded fund according to a filing with the Securities and Exchange Commission. The ETF's investment objective is to track the performance of Bitcoin according to the SEC filing. The fund will trade under the ticker symbol ARKB if approved by the SEC. Ark Invests is working in partnership with 21 Shares to launch the ETF. So another ETF. That's the thing I like about Ark Invests by Katie Wood. She launches ETFs and not like mutual funds or like these expensive funds. She just launches ETFs, which are usually cheaper than mutual funds in terms of fees. Bitcoin has hovered around 34,000 for the past couple of weeks as it struggles to reclaim its May highs. Ark Invest acknowledged the volatility associated with the digital asset in the risk factors section of the filing. So this is good. A fund manager, as a fund manager, a professional fund manager, and someone of her stature, renown, it makes sense for her to list out the risk factors associated with Bitcoin. So far, there have been 8 other Bitcoin ETFs filed with the SEC. Again, last week I talked in my previous video about a crypto fund launched by Anderson Horowitz. Check it out if you want. Please, come on, it's a good video. And also, so far, like the video. Come on, I'm reading the news for you. You don't have to read them now because of me. Wood has said she sees a future where Bitcoin is part of a balanced investment portfolio. This is also a part of finance nowadays in the investment world, because back then, before cryptos exist, fund managers would say to have a balanced portfolio, you need a mix of stocks and bonds. And in my opinion, this is my opinion, not financial advice, I don't think bonds are worth it anymore. This is just my opinion, because bonds are really lacking in terms of performance compared to back then. Back then, bonds could get you 6 to 10% usually, but now bonds are decreasing. Maybe they can get you 2 to 4%, 5% maybe. So I don't think bonds are good for a balanced portfolio nowadays because the returns are so low. Stocks are still good for a balanced portfolio, but now, like Katie Wood, I think I prefer a balanced portfolio of stock, crypto, gold, REITs, real estate investment trusts. I'll talk about that in a future video. I think that's the balanced portfolio that I would prefer, but again, it's just my opinion. Wood's disruptive innovation funds have recently turned a corner after months of underperformance amid a rotation into value stocks. Shares of Ark Innovation are up more than 60% in June. And that's the news about the Ark Invests new Bitcoin ETF. It's really interesting. So far, the Bitcoin ETFs that I know of, they have returns of around 20 to 100% annually. 100% being highest, of course. That's why I'm saying 20 to 100. I'm not sure if she launches her fund. I don't know how it will perform. Maybe like that, maybe higher. Because so far in my opinion, I don't see investing in Bitcoin or any crypto funds being good enough for me. I would just prefer investing in the crypto itself because it's cheaper, no fees for the middleman. Like I said, the highest crypto fund earned 100% in a year, while Bitcoin itself earned last year 770%, Ethereum about 1,300%, which just shows how these crypto funds earn so low compared to the crypto itself. Just like investing stocks, earn maybe 50 to 150% a year if you're good at picking stocks. But if you invest in funds, they would do really good risk management, diversification, and this will affect your returns. This will make you safer, but it will affect your returns. I'm young, I love risky things, I love high returns. Don't do what I do if you're not like me. Robinhood reveals breakneck growth, legal pitfalls in IPO filing. Robinhood Markets Inc. on Thursday set the stage for its hotly anticipated IPO, its initial public offering. It's basically when a company wants to go public, so initial public offering, IPO. That's what Robinhood is doing. It wants to go public to be listed on the stock exchange, as it revealed rapid growth in users of its trading app in a filing, while also flagging a swath of investigations by prosecutors and regulators. The company under scrutiny after this year's trading frenzy for so-called meme stocks such as GameStop is aiming for an IPO valuation of over $40 billion. In case you don't know about Robinhood, this is a stock trading app, really popular, but it was involved in with a lot of problems, especially the meme stock trading like GameStop earlier before, and is now going for $40 billion. Not bad. Earlier this week, the Menlo Park, California-based company agreed to pay a $70 million fine as part of a settlement with US financial regulators who accused it of failing to vet its customers and implement risk controls. Yeah, it was fined $70 million because it failed to vet its customers and implement risk controls. So basically, if you have people who are trading on your platform, investing, you need to vet your customers. Make sure that they are educated, they know what they're doing, they know how to trade, the risk involved. So they need to manage, implement risk controls to make them know about these things. Because investment, yes, it is somewhat risky, but trading is far riskier. You can know about this in my previous video, investing versus trading. Check it out. The company was also sued this year by the family of a 20-year-old stock trader who committed suicide, citing the app's misleading communications that caused their son to panic over what he wrongly believed were huge market losses. So this is also related to another news about 20-year-old stock trader on Robinhood. He basically, on Robinhood, he saw that he lost $700,000, which was a mistake on Robinhood's part. It wasn't actually $700,000. It was less than that. But yeah, Robinhood's fault there, and then the guy committed suicide because of it. A majority of Robinhood's revenue is derived from payment for order flow. Under this practice, brokers receive a fee from market makers for routing trades to them. Critics argue this creates a conflict of interest situation whereby brokers are incentivized to send orders to whoever pays the most, which might not necessarily be the best deal for customers. Regulators are scrutinizing Robinhood over it. So basically, this is a problem with Robinhood. Although it says it's a free trading app, it's flowing the orders of the trades from the people who use Robinhood into market makers who charge the most. And from this, although Robinhood seems free, looks free, it's actually not. They're being paid through the people who are making trades through their app, which is also a huge problem. Founded in 2013 by Stanford University roommates Tenev and Baiju, but I don't know how to say their names. I'm just going with the flow. Robinhood's trading app has made it easier for the masses to trade securities and electrified a generation of retail traders. The online brokerage plans to list on the Nasdaq under the symbol HOOD. So even with all these problems, they're going ahead with their IPO valuation under symbol HOOD. That's it for the news of the week. Please leave a like, subscribe too if you want more like this. I don't just post news, of course. I also have other content, teaches the difference between trading and investing, why you should invest even if you're young. I even have a future video about how to invest in all kinds of investments, because my previous video shares about how to invest intelligently, which is basically psychology and mindset. So that's my take. Thanks for your time. So before the next video comes, how to invest in all kinds of investments, be sure to watch the How to Invest Intelligently video. It really helps you to learn about how to invest before you start investing. Thank you.